Good morning, everyone. Some of you might know us already. For those of you that don't, my name is Antonio Mellado. I'm the Innovation Advisory Manager, and together with my colleague Arthur Boetti, Innovation Advisory Officer, we'll present the webinar on commercial and financial sustainability. So starting from the agenda topics for today's webinar, well, this is the seventh webinar out of 8 webinars. As I said, the topic is commercialization and financial sustainability. There's one more webinar in the afternoon about intellectual property. Now, we move to the agenda topics. So today, first, we're going to gain a common understanding of what the financial sustainability mechanism is. So we are all aligned. Later, we'll pass into the topic of the evaluation criteria and how important it is to build a strong business case at the proposal stage. Afterwards, we'll see what the different pathways are available for the commercial partners. And finally, at the next steps, we'll see how to submit the proposal and what are the phases that we will transition over the coming months. At the end, we'll have time for Q&A. So please hold your questions until the end, and we will allow time to answer. So financial sustainability. What is the objective? At the EAT, urban mobility or innovation projects are it's all about business. So what we mean by business is marketed innovation and new companies. So all is based, the main objective is only focused on succeeding in the core KPIs. Okay. From a funding perspective, the EAT, Urban Mobility, receives a block grant from the EAT, the mother agency. And over the 15 years of funding, from the 7th year, the funding is decreasing. So we have the mandate to be financially sustainable. What it means be financially sustainable means having our own offering and having the possibility to be valued for the ecosystem and survive beyond the funding cycle. This is what is called the financial sustainability mechanism. So we are not a pillar 2 program. We are in the pillar 3 of the Horizon Europe framework, close to the market, looking at the commercialization. Our projects are focused on outcomes and not activities. And we expect to see, and this is an eligibility criteria, products at TRL 6 and above. Why is that? Because same products has to be able to justify the core KPIs with proof of sales, even before ending the project. Now, looking at the sustainability, we see the role of the commercial partner as a key project partner. The commercial agreement we are looking to sign with the commercial partner is a win-win. The model is to build up on the capabilities and increase the likelihood to scaling up the adoption of the solution we funded. From a company perspective that is looking at growing in sales, they will gain chances for a successful go-to-market of the product and the company itself. You will get insightful support in how to protect their intangible assets, the possibility to be coached by experts on sales and excel in the marketing of the products, ramp up their sales, and what is more important, use the pilots in the project as a use cases for their company and future prospects. In the sense that it will be that successful that could be used as a showcase as a best practices, okay, in the sector. For a company on the other side that is looking at the next fundraising round, our projects are the perfect tool to improve their financial KPIs for the next round. Increase EBITDA, free cash flow, and even attract new co-investors to the round, having the EET Urban Mobility subscribing shares. They will also have access to our investment portfolio managers and get advice. Now we see how financial sustainability is not about the kick. It's all about the commercial partner. Without the success and the scale up of the commercial partner, the growth in general, we won't be sustainable. So now, if we see at the evaluation criteria, and we analyze carefully what is written in the call documents, section 5.2, all is referenced to the business plan of the commercial partner. Things that like customer needs, addressable market, customer segments, benchmark analysis, alignment with the demo host. This is important because having the possibility of assess the efficiency and the results of the pilots might convince the demo host to extend the pilot, to buy the product, and might open opportunities. Intellectual property rights management, aligned with business goals, business model, commercial strategy, marketing strategy. So as you see, all is based on the business plan of the commercial partner and its priorities. So that's why the key for a successful proposal is building around the commercial partner. Now, we are in a position to move to what we offer, what kind of support we offer, what the different sales, different pathways are, and how important is for us that the commercial partner success. So the first pathway that we are going to explain is the sales pathway. The minimum and mandatory service package that we are looking at as a financial sustainability is the visibility, the IP inbox, the targeted webinars, and the CRL evaluation. Visibility has to be with making your company and your products visible for procurers and sustainable managers visiting our website. Last year, we've got 95,000 visits to our marketplace. And just last month, 2,407. It will also be the possibility, in alignment with the editorial calendar, to publish your products and the results of the pilots. We have more than 12,000 subscribers to our newsletter. The open rate is around 33%. That means 4,000 people open the email, and 2.7% click rate. That means that they transition from the newsletter to the marketplace. In terms of IP, you will have access to or high qualified experts in-house in IP that will guide you through the best strategy to protect your intellectual property. That exercise increases the chances to have a better valuation of your company, but also be protected against the competence. Take advantage. We have an agreement with the European Intellectual Property Offices, and we look after your intangible assets. Target webinars. You will have access to a very exclusive webinars in relevant topics for your company. We had webinars on pricing strategy, access to subsidized services from the Commission, like the Horizon Results Buster, and the next one is about innovation procurement. The CRL evaluation will help us to understand what is the commercial readiness level of your company and its maturity, and guide you through to the next step. Additionally, this is the minimum we are looking at, but additionally, you have the possibility to be coached in a program that has been designed to empower companies with the necessary knowledge, tools, and strategy to enhance their sales capabilities and drive sustainable growth. During the coaching sessions, we'll touch on topics like B2B management and sales, pricing and value proposition, B2B, B2G, and your sales process. The output of those sessions is a roadmap for you to increase your pipeline and open new funnels for sales. Last, as a service, we have the possibility to opt in, and this is not mandatory again, the same as the sales coaching, to our premium sales enablement service. It will give you access to your company or your sales department to the innovation advisory officers at the EET Urban Mobility that will work back to back with you to generate qualified leads. Our sales process starts from the prospection of leads, discovery meetings, pre-qualification of opportunities, and qualification. It's at the qualification stage when your company will be invited to pitch with a potential prospect client. Access during this process, you will have access to services in the different stages. So the event poster, for example, means that any panel we participate, any trade event where we have access to give you a spot and have a stand, you will be invited. The event representation opens the possibility for us to arrange discovery meetings with prospects from your pipeline in any trade event that we are attending. Consortia introductions and tender scouting has to be with us, analyzing every single tender in Europe that is published and share it with you. If you have interest to apply and you need our support to find consortia partners, we'll look into that with you. This is what is service about and how we want to support This is the win-win offering for commercial partners. Now, we can move to the investment pathway. For that, I will give the floor to my colleague, Arthur. Arthur, thank you.
Yep. Thank you, Antonio. Yep, okay, now I can see myself. So welcome everyone. As Antonio was mentioning, we also have an investment pathway, which is mainly focused for those companies that are part of EIT Urban Mobility equity portfolio, meaning it's usually for the companies that we have already invested in the past, meaning we already have equity and shares in said company. The idea behind this is if you're already an equity portfolio company, the idea is to go for a equity increase in your company. And the way we proceed to do that is through two different investment instruments. The first one being an existing price round, meaning there's a co-investor who has already led the round. There's a company valuation which is known, and then the price per share is also determined by said valuation. And then based on the grant provided to the company, we will get an equity increase. Now, for those companies that are also part of the equity portfolio, but there's not a round, an investment round going on, we usually go for a future equity, also known as a safe agreement. This is an agreement that states that once there's a trigger event that lets the valuation of the company known, that's when we will proceed to get the ownership of the shares. And usually in these kind of scenarios, there's a valuation cap, which is negotiated, and a conversion discussion, which is also negotiated. This is usually dealt with our impact ventures team, which is a specific team that focuses their work and on getting equity and getting the best possible outcome of these situations. So again, this is for those companies that EIT Urban Mobility already has equity in them. Now, we also have an opportunity to go through this investment pathway for those companies that are not part of the equity portfolio, meaning EIT Urban Mobility does not have an investment yet on their company. The idea for this is that it's a two-stage process. First process, you will have to go through the investment thesis, which is basically the points that we have here marked. So a geographic focus, meaning you are based on a EU member state or a third country associated to Horizon Europe. We are going to be aiming at a target equity between 1 and 5%. There's going to be a holding period between 5 and 7 years. There could be some follow-on investments. Usually we go for early stage companies, and usually there's a pre-money valuation of up to 20 million euros. Now, also in this investment thesis, we have the option to exit, right? So if there's an exit, we usually prefer to access to corporate acquirers and secondary sales transaction, meaning that existing shareholders or the already company is gonna acquire our part of the equity in the event that there is an exit. And again, the companies need to have a thematic focus that it's aligned with our values and our focus ourselves, which is usually products and services applicable to urban mobility industries, innovative components, industry knowledgeable and diverse team, and a social and environmental impact. Now, this is, again, the first step for those companies that want to go through the investment pathway, but that are not part of the equity portfolio yet. The second step would be, once all of these requirements are met, we would go then to the new company spin out approach, which is the third pathway that I'm going to explain now. So again, this third pathway is usually focused for those projects that are gonna create a company or a spin out of an already existing entity in order to commercialize the product, meaning that during the course of the project, the company will be created. So as I mentioned, if the commercial partner will be this new company created, there's some aspects that need to be taken into consideration. First and foremost, during the second round of panel hearing, which is the second phase that we'll explain later on, all of the consortia will need to adhere to this agreement and make sure that the new company that will be created will go through what we call the market readiness evaluation program that will be taking place during the project, right? So therefore, because the company is not yet created, the consortia is the one at a first stage devising the equity that will commit of the new company as the proposed FSM. The consortia is also accountable to make sure that this new company and this spin-out is created, as well as its registration, its capitalization, and operational setup, meaning the commercial agreement will be with the new company created, but the consortia carrying out the project needs to make sure that this new company is created. So usually this company, we like them to be created by month 6 of the project, because that way during the amendment phase, we can include them as a partner during the project. And we can also reallocate some existing tasks and funding to the new company, so it becomes a full member of the consortium. Now, once the company is created, this new company and this spin-out is created, they are going to have to go through the market readiness evaluation program, which is a program that it's done externally over the course of 80 hours. That takes about 2 months. And this is usually done during month 8 and month 12 of the project, right? So again, ideally, we like that the new company is created in month 6 so they can be included in the project during the amendment phase, but at the latest, it needs to be created and registered by month 8. Therefore, we will start the process of this market readiness evaluation by month 9. And the idea is that through this program, we will have a better understanding of this new company, right? So a little bit how this program works, there's different phases. The first one, there's a preparation phase where they're gonna get in touch with the company that's gonna carry out said program in order to ask for some documents in order for them to analyze a little bit more the company. Then second phase, it's what we call the sanity check. Usually in this area, the external company is gonna carry out an analysis on the solution, the team, and the market opportunities of this new company. Then the third phase is the screening grid, where here we go a bit more on the financial situation and the projections that this company is making for their newest solution. Then we have the market readiness monitoring, which is also accompanied by some mentoring as well, in order to help you navigate the market a bit and make sure that you are ready to penetrate the market and keep growing. And then at the end, we get the program closure, where for us as EIT Urban Mobility, we will be getting a report at that stage. Now, it's worth mentioning that in order to go through this program, there's a fixed fee that needs to be paid before the start of the program. That's basically going to cover the cost of said program. And the idea is that once we get this report in the final stage, EIT Urban Mobility will decide if, based on the report, we decide to go for equity in this new company created, or in case we decide to go via non-equity, a second defined fee will have to be paid, and then we will be going through the sales pathway. We will devise a specific amount of services that will correspond to the second fee. Right. So those are the three pathways. I do like a little recap in the fulfillment proposal, because so now that you know the different pathways that we are offering as the financial sustainability mechanism, how you're going to have to present this in your proposals is in the section 4, which is called sustainability. It would look something like this at first, but then once you decide to fill it out, you will have to complete all of this information. So of course, identify and mention who is going to be the commercial partner, as well as some information about said company. And then in this area, in this last area, you're going to have a drop-down menu that's going to showcase the 3 different pathways that you can choose as FSM. So just as a reminder of what we have already seen, we have the sales pathway, which is what my colleague Antonio presented, the services where you pay, where there's a defined fee in order for us to keep helping you in order to grow. There's the investment pathway in case you want EIT Urban Mobility to get equity in your company. Again, if you are a company already part of our equity portfolio, you have to go through the investment pathway. And if during the project there's a new company that's going to be created, you will have to select the new company spin out created as a result of the project. And now, as I mentioned before, the different phases of this process. So as a first phase, you will have to submit your proposal, where, as we have seen, you have to identify who the commercial partner of the consortium is going to be, as well as the FSM pathway that you decide to go for. In the second phase, there's going to be the panel hearings, where we're going to ask for some financial statements, and that are going to be reviewed by the external evaluators in order to make sure we evaluate the entirety of the consortium, as well as the outcome that was highly important, as my colleague Antonio mentioned at the beginning. In the third phase, meaning in the conditions clearing phase, if you are pre-awarded at the project, there's going to be a negotiation and signature of the commercial agreement. So the commercial agreement is the legal document that states the FSM pathway that you have chosen. And lastly, once all of the conditions clearance are met, the project will start its implementation, and then we will have an onboarding with our innovation advisory team for you to keep working and collaborating together, as well as make sure we execute the commercial agreement that was agreed. So lastly, I'm gonna head back to my colleague Antonio, who's gonna mention some of the metrics for the financial clearing that are gonna be looked at. Antonio?
Yes, thank you, Arthur. So at the financial clearance, this work is undertaken by an external audit firm. And what they are going to do is review the financial statement, the last financial statement at the audited. And what we are looking at and evaluating are those ratios. So the liquidity, the solvency, the return on assets, and the return on equity. The result of this analysis should fall into the range in brackets for us to consider the commercial partner a reliable commercial partner. This information is passed and used by the selection committee during the panel hearings. So now I think we cover all the slides that we wanted to explain during this webinar, and it's time for Q&A. So,
Yeah, so I see that we already have some questions. Feel free to type your questions in the Q&A chat box and we will answer them live. So we have the first questions that says the FSM for sales pathway is mandatory, correct? So the next question is, what is the pricing of this service? Is there a list of mentors and overview of training, more details somewhere? What if the startup is not happy with the service? Can they cancel it in the process?
okay, so good questions. Yes, the sales pathway is one of the options, not the only one. You need to choose one of them. This is mandatory. The pricing is published in the guidelines of the financial sustainability with all the details of each service. And the mentors and more detail about the services will be shared during the conditioning phase. If the information in the financial sustainability guidance is not enough by now, please book a time with us in the V2 Match platform or write in an email to the email address that is in the screen. The possibility to cancel the service is not an option, but you might decide not to renew the contract. The services are granted only for a period of time. Afterwards, yeah, you can cancel it.
So the next question we have is, if I'm a non-portfolio company and I want to go the equity model and I don't pass the assessment, does that end the application or can I change to the sales pathway during the assessment?
If you apply for the investment pathway, but you are not eligible, we will always have the possibility, if your proposal progress, to change the pathway. So I don't think that will be a problem. Yeah.
Following question. 6 months ago, EIT Urban Mobility invested in our company. According to our investment agreement, any additional investment should be based on a new valuation, not the one from September. Could this case be structured as a convertible loan to be converted into equity in the next investment round? Alternatively, are there any other solutions for similar situations within the EIT Urban Mobility portfolio?
Absolutely. So in your case, the legal mechanism that we will use upon assessment of the investment department, of course, it will be a safe agreement.
Following question. In the case of the first channel, sales pathway, do you confirm that only the basic sales support is mandatory, while how to build a sales pipeline and the sales enablement premium, in this case, I understand, are not mandatory? Moreover, in the case of the basic sales support, when should the company pay the price for the service?
Okay, only the first mandatory package is mandatory. Somehow, if what we want to see is motivated companies, and if we see value, because there is appetite in the market for your solution, we might invite you to enroll to the premium directly. What was the second part of the question? Sorry, Arthur, I'm losing the chat.
The second part of the question is, in the case of the basic sales support, so the mandatory package, when should the company pay the price for the service?
Okay, the price, the payment date will be agreed during the negotiation of the commercial agreement and its signature. Okay, we are flexible on that. Yeah, we can divide the payments into if necessary during the year of implementation.
So the following question is, what if our company has had a negative balance sheets in recent years? Is that a problem for the application?
We might need to look into this specific case. But yeah, so we need to look into that. Yeah.
Okay, and the last question we have on the chat is, are the cost of the FSM sales pathway eligible as a budgeted expense, and are the OGS or subcontracting? or
No,
are they ineligible for the project budget?
it's ineligible.
Okay, so that was all the questions we had on the Q&A chat. Feel free to type any other questions you might have. If you have further questions down the line, feel free also to connect with us via the Bit2Match or send them to the Innovation Call. Okay, one more question. Based on the best value for money principle, can the beneficiaries in principle be able to select other suppliers of FSM mandatory package?
I'm not sure of being understood the question, but the suppliers is the ET urban mobility. We are the ones offering the services. Okay.
Okay, so we can wait for a few more minutes if you have any other questions.
Well, I think we can close, right, Arthur? Because in any case, you have the opportunity to reach out to us in Bit2Match, in the email address. More than happy to have one-to-ones if necessary. We are available for all you. Any question you might have in preparing the proposal. Okay.
So just one last reminder that this afternoon we have one last webinar about the intellectual property. As you have seen, for us, it's quite important to make sure that your innovative solutions are protected. So highly recommend to attend this one. And I believe that's the end of our presentation, unless there's any other questions. If so, again, feel free to connect with us if you have any more questions further down the line. And I hope you're gonna have a great day today. And thank you for joining us.
Good luck. Bye. Thank you.